Welcome to another episode of In Conversations from our platform. Today, I have the privilege of talking with Maj Gen SQ Ahmed, who I had the privilege of serving with him while in service. The brilliant officer, and I'm going to bring his perspective of what he is doing now as a veteran, by asking him about what he's pursuing and how that is helping other veterans and other people. So, welcome to the episode, Major General SQ Ahmed.
Thank
And
you, sir.
so, the first question which I want to put to you is that what is it that you have pursued after you retired, and how are you? What is the purpose which you are fulfilling, and how you using your time for some in a good way for yourself and others? SQ, please.
Sir, thank you very much, first of all, for letting me into your such a lovely talk of in conversation and asking me to share my experience. It's a very wonderful thing because this is exactly what I found purpose after my retirement, sir. So while in this service, one was involved in the professional aspects of our career. One has been rubbing shoulders in forward and at the peace locations. And one thing which I found during that time is that we always, because of paucity of time and our pre-engagements, were actually left for others to manage our personal money that we were earning. And somewhere in my career, I realized that there is also a window where, while doing our career job, we can also look into our personal finance because that's also our responsibility towards our family and others. And why should we not grow if we can, when the country is providing us so much of facilities in terms of asset and infrastructure in the creation of your own wealth from legitimate sources? So one used to have often on discussions with people, and when I got very different views from various friends and juniors, and also sometimes very senior officers who used to have their own kind of views on it. So I said, well, now that I have retired, it's a right opportunity for me to put across my viewpoint to them and try and influence them as to what is lying in store for them. So after settling on initially for a few months, I thought, let me make this as a personal goal in giving back to our own brother officers. So, and I found great satisfaction in it. Thankfully, I was given a lot of opportunities by senior officers who were in position to call me, and I took lectures for the officer group, officers and families, which I had done also while in the service on a very informal level. So I found it very interesting. And once we started logically discussing things, then there was a real big interest that came in the audience. And one of the most memorable thing I remember was addressing the young officers of the YO's course in infantry school, where I had a bunch of 200-300 officers sitting in front of me right into the career. And there was the senior officer talking to them about managing their finances, not to try and put their mind away from the line of duty, but to take some simple step and forget it for the life and keep doing your job at the line of duty, because this step that they have taken would take care of the rest of their things till the time they grow up on their own and start investing. So I found great purpose in it. And I was also called upon by some friends to take a podcast and all. So why don't you educate through that? So I started doing that, and basically, it's a this I found a very interesting thing. It also honed my own skills because now I have become a full-time investor of my personal wealth. I don't need to go to any of the people for advice, which one had learned a very hard way through. So that's how I'm keeping myself occupied, sir. And one, your platform has also come in very handy, where I'm sure if a lot of people will see it, they will benefit from whatever little experience I have got, sir.
So that's a very interesting thing which you have just said, and what comes to my mind is that at what stage, because obviously doing what you're doing must have needed a lot of study on your part from various sources. So can you throw some light? Let's say also this may help somebody else who wants to pursue this line of purpose or line of work, I would say, after retirement. So, can you a little bit share with the audience as to how did you go about learning and preparing yourself to be able to have this together in a cogent manner to address people's you know people's requirements, and how did you lift yourself in this field to where you are now? SQ, please.
Sir, it started more like a passion, sir. It was like probably a hidden desire to do something with the finance, and it started very early in life, probably when I was a captain. But those days, means were very difficult. You know, you had to run to brokers, and everything was on paper. They were very difficult. But since there was a passion, I just wanted to adventure into this field as to what it is. I started dabbling into it, and thereafter it has been a hit and luck and not so lucky kind of an affair for most part of my journey. For the next about 10 to 15 years, it was difficult times, sir. I may have also lost my money en route because one was not having the understanding of this. But certain things happen. Some of the investments that I did really got triggered by default, none of my credit to it, and I got the confidence back. I wonder if I can take names, but since it's an old story, I can definitely recall by name also. There was a listing of a stock that came into being of Morgan and Stanley way back in, I think, somewhere in early 90s. So I don't recall the exact year. And my only credit was that I applied for its IPO. I didn't get it. So the share was listed at par price of 10 rupees. I didn't get it. But unfortunately, it's such a huge IPO that came. It got listed on the opening somewhere around 9 rupees in the first 1 month itself. And those days, we didn't have this bulletin of digital media. We had to rely on the newspaper. And every day, next day, newspaper, after 24 hours, we used to get this data. And then I realized that if my investment had happened, uh, I would have lost 10% within 1 month itself. But I saw that as an opportunity. That maybe there is an opportunity lying. Morgan Stanley is a very big name across the world. I thought at 9 rupees, I am making a great game. So I then applied from secondary market through the broker, and I bought 10,000 worth shares at that time. And 10,000 in those days for a captain was a decent money to invest. But that was purely passion and probably conviction that something may emerge out of it. So why I'm bringing this out is that sometimes you have to actually push your passion, even if it is not having any logical backup. Only then you can realize what it is. So I did that, and to cut the whole story short, Morgan Stanley did not do well in India. For what reason, I really don't know. I didn't have much to read about it. And that money just kept going down, going down. It went down to 2 rupees, 1 rupees, and one day it stopped appearing in the newspaper at all. And I thought I lost my money, and all I had was 10 sheets of paper of 100 shares each. I didn't know what to do with it, sir. So it was the most hitting moment of my life, and I said, enough is enough. I think, yeah, say so. Everybody tells, right, be away from this. This is not the right field. And I burned my fingers very early, and then, of course, the professional job was also going side by side. And then one day, again, because of this passion, the Reliance was a big name in those days, and we were making waves that any investor of Reliance does not lose money. So I thought maybe, whatever I have lost here, maybe, if I invest in Reliance, probably it'll come back. So Reliance came with another IPO called RPPL and RPEL in those days, two side companies of chemical they wanted to open up. I applied for that IPO, but the day when the form was to be submitted, I was flying those days. So unfortunately, I had a commitment outside. So I requested my dad, why don't you go and please deposit this? So my dad obliged me. He went to the broker. There was a huge line, physical line standing to just deposit the form, which my dad told me later on that it was a tough job. It was as if I'm standing in some big queue in those days. But he did that, and I was lucky, sir. I got that first allotment that on my name through the initial purchase order, and that's how my journey started. And these two were actually the turning point. One where I lost my complete money, and the Reliance where I kept faith, and I thought maybe, but I was not giving much to it. I was just trying still. And this happened somewhere in mid-90s or so, as I recall. But the turning moment happened, and thereafter I forgot, because thereafter one was in the formative years of your career. So I had field posting, staff college, all that. So that was actually taking my mind. So these two were my investments, worth about 20 odd thousand rupees. They were invested, and I have just left it at that. And I said, "Kuch hoga to dekhenge." Otherwise, I have considered it lost money. And it was sometime later when I think after my initial battery commander days and all that, when I became a lieutenant colonel, I came to a peace station. And accidentally, I got there was some gentleman who came to give a talk to my brigade. He was also talking of investment, so we kind of tuned in. And I learned at that time that the money that I had lost in Morgan Stanley share, the share in those days had come to 27 rupees, almost after a gap of 10 years. So my 9 rupee investment became 27, which was three times in 10 years, unheard of during those times. And something happened with Reliance little later. What they did was that Reliance, those RPPL and RPL shares were merged with Reliance main company, and I got some 10, 14 shares of Reliance. And subsequently, as we all know, when Reliance demerged itself into 5 companies, then these companies created a lot of wealth for me. So that wealth also became some 3, 4 times in about the same period. And that is where I again started thinking that no, there is some method in this whole thing. And that's when I started seriously looking at it, that one must look into it. And then came series of efforts to try and learn that. So I think what my message to people would be that today there is enough scenario available where one can learn. So without learning, it's not possible. You have to educate yourself through whatever means that are available. In my time, there were these financial magazines that were available. There was a very popular magazine called Dalal Street. I used to read that. And of course, newspaper. Then I started reading the finance news side by side besides the primary news. And that's where I once started picking up things. So today there is ample of opportunity. Today, the one doesn't have to do anything. So just open YouTube. There is so much of visibility available. You don't have to burn the fingers like this. We just have to be a little methodical. Don't jump to any conclusion. And there are various instruments available where you can just invest and forget. I will not say forget is the wrong word, where you can invest and just keep it on the sideline, can keep looking at them from time to time. I think there's a whole lot of India is emerging. It's India's decade or maybe 2 decades when the markets are really coming up, and we are going to see Sensex more than a lakh or maybe 2 lakhs in times to come, just a matter of time. Incidentally, sir, when I started, Sensex was at the index level of 100, 200 points. And today it is 80,000, 80, 81, 82,000. Nobody could have kind of seen this kind of a growth. So that's what the potential is, sir. I thought I'll leave it at that, sir, at the moment, sir. For you, sir.
Yeah, so let's say now that you have been in it for some time and you're also advising others. So how is it that you keep abreast with everything so that you're fully informed and for not only for your own investments but for advising others? How is it? What is it that you do? What is the sort of a routine you follow? How much time does it take? Let's say a veteran is looking at getting into this sort of a thing later at some point in life, as to how much time would be needed to be put into it on a regular basis to be able to do something meaningful for themselves, and also to, if somebody else asks, to be able to advise them in a decent manner. SQ, please.
Sir, wonderful question, sir. Time is one thing which is again available in abundance to a veterans. It's just one has to really channelize it. How do we use it? So actually, time was never a problem. As far as I am concerned, sir, I start my day in the morning around 7:30, looking at the world news, because now that we are talking specifically of the markets, markets run 24/7 throughout the globe, sir. So when India starts the market, the US had closed down, the market in Europe has closed down, and we get cues from there, the world cues, and you kind of anticipate. And that morning time from 7 to 7:30 to 9 o'clock is the time when you try and analyze for yourself what has happened. Of course, this kind of a little expertise will come after you have been into market for about few years to be able to pick up the indicators. But even if you start looking at it, one would be easily able to adapt itself for the next in the next couple of months itself. As far as advising is concerned, so like my advice is, I'm not a what's it called, that serious, that SEBI kind of an advisor. I just advise on a personal basis. So I pick up most of the advices from what I am doing myself. So I now that I know that people do ask me what it is. So I started reading more than what I actually invest. I started reading the new sectors, what are the business opportunities, and I realized the more I read about it, it's not only the stock market. My knowledge as such about technology, about things happening in the market, it has increased, and it put me in such a lovely forum. Whenever I meet people, I am now talking the latest things to them, which my other veteran friends are not even aware of. So I find myself in the club of youngsters when I talk to them about the AI, or I talk to them about the electronic vehicle kind of thing coming up, when I'm looking at chip, when I'm looking at so many things. Technology is the driver today. So, and I must thank you, sir, for putting me into this technological view. I remember when I came to you, what I told you, you know it, that I don't know ABCD of technology, but you said you learn it and it will benefit. So I think after that, it has been a push. So today, sir, if you have to monitor, if one has to monitor, there are very simple steps. You open an account in any of these security firms, and that platform is available to you digitally 24/7. You can look at it. In that platform itself, there are so much of research available, which they give in the research column, news, analysis, that you don't have to go anywhere else. That is one simple step. Then second step is that there is another, a very simple site. I mean, not to promote any site, but what I use is screener.in. Now, Screener is a very good site. It gives you a complete detail of a company, not only its profit and loss statement, its balance sheet, but also if you know the side notes, it gives the complete company PowerPoint presentation, investor presentation is what they call, and that is the most knowledgeable thing because you hear about a company from the company. And then there is a con call recording which is there in that. They put it the last con call, which the CEO is speaking to you and speaking the mind out of the company. So once you read that, you know what the perspective is going to be. So I think this is a very simple way of keeping track of your investments and letting yourself in. And thereafter, it depends on how much you want to explore. So as far as my time is concerned, I realize that this has now become like my passion and a hobby, more than an investment, because whatever I had to invest, I have already invested. I can't keep changing my investment because investment is like you only periodically see it, you don't see it day to day unless you are trading day to day, which I don't advise to anyone, not from our background, because neither we have that kind of a time, nor that's I don't advise that at all, sir. So now my study time has increased. I study more, I analyze more news. So for them, time is unlimited. I spend about 4 to 5 hours in the morning and maybe 2, 3 hours in the evening on a regular basis, which keeps me really quite upfront in a lot of things, sir. Sir.
That's very nice because I think as a veteran, you need to do something purposeful and also use your time for something which is fulfilling. So, do you feel that this is helping you achieve those sort of aims and keeping you, like you yourself very rightly said, it's keeping you abreast with the latest and you are able to participate. So, that way also it benefits. What do you say?
Absolutely right, sir. I think firstly, I am personally very enriched because I don't have to go through I don't have to search for something which I'm not sure what it is. So I found my idea, and it doesn't affect my any other life. So even if I want to work with someone, like I got a couple of offers to work also as an advisor to their company and all, I can do that. I can pursue that in my own time. And this study is at your own pace. You can do it at the night, you can do it in the morning. So whole day is available. I can do my kind of help to my wife in whatever she wants to do. I can go out shopping with them. I've already done a lot of holidaying. So even when you holiday outside, the mobile is available, the digital platform is available. You can do investment from there. So I think it's a very perfect thing. It keeps you abreast with the latest technology also. So it comes in handy from your day-to-day refinement. As far as information to other officers are concerned, I think when I talk to them, I got a lot of queries from young officers specifically, and a lot of my friends have requested me to come and give lectures. So whenever I find time, I go to them. There are two of the lectures which are pending confirmation. One has asked me to come to one of the colleges and give me this presentation on motivating the young minds into investment journey. and one NCC is also waiting. So they have informally told me that, sir, why don't you come and do a podcast with me? So I'm waiting for their invite. I have given them a okay. So it's a very good process of connecting. And I think, sir, investment is a requirement for everyone. Unfortunately, I feel that we should have investment as a education curriculum in our school. We teach economics, we teach commerce. Why don't we teach investment? I don't know how it can be done, but it's a requirement for everybody. I was just going through the statistics of how we invest our money in India. So Indians, I'm talking a very average. I just studied somewhere. So just a average Indian household saves about 20% of their income. This is across the board, lower class, middle class, higher class. They save about 20%. Now, if we just convert this into the income data, look at the money that India is going to save. Now, if that kind of money, it goes into billions. Now, if this money is being saved by India, where this money goes in India, if it just remains into banks and FDs or property or gold, it is not going into the development of the country as such. But somehow, if this money flows into the business, the country grows. Look at the developed economy. I just did some reading about the US. How does US invest their data? Now, when the US invest their data, I think 55% of their investment goes into their economy, goes into their market. So that is where the boom comes, and that's where they have the money to invest and they have money to grow from themselves. Like sometime back, sir, people said that in India we have too much of gold, that we have every household has got some grams of gold. So if we just multiply, India itself is sitting on a great wealth of gold, which is very good. Similarly, if Indian investors start looking at market as their destination for the money to be parked for the period that they want to be, this money will be in the hands of the equity to be able to progress themselves. So I think there is a big story left. And this story is only, I get only my conviction only from seeing the data. Till about 4 or 5 years back, our demat accounts were hardly any, sir. And the growth in the demat account has been 20 to 30% every year. Today we stand at, I think, 185 million demat accounts, growing. Similarly, is the opening up of the SIPs in the mutual fund industries. It's humongous. The growth is very in great proportions. So I think people have started realizing this, and it's just a matter of time. If the growth take today, we are just about 10 to 11% of the whole market. To even if you go to 20 to 25%, just see the opportunity from here of doubling the market as a whole is humongous and huge. So we have a very bright future. That's why I say India has a story to happen, sir.
Yeah, that's been very interesting. So, SQ, can you tell me a little bit of data about how things are changing in the various investments available? SQ,
So
please.
just broadly, I just Googled it just to give the specifics. So the data that comes in front of me is that the mutual fund industry, which is now growing at a fast pace, how it has developed in last 5 years. So the total investment was 22.26 lakh crore in 1920, sir. And now in 23-24, when the data is available, it has gone to 54.1 lakh crore, almost doubled, or maybe more than that, sir. So that's the kind of opportunity which the people are seeing into it. And mutual fund being at a least thinking involved in mutual fund investment, there are people who are advising. You just go and invest in that and just sit pretty for a while. It will automatically grow. People say 9 to 10% is normal, 12% over a long period. You will get the XIRR of 12%, which is very fair, sir, to invest. And people have made good money into that, sir. Sir.
So, one thing which now comes to my mind is that there are, when people are moving out, let's say, into the investment field, you must have come across what are the sort of common mistakes they make, and how can they possibly avoid making these mistakes now that you've been in this for some time? SQ, please.
Sir, the most common mistake people do is they think that it is easy money. Actually, it is not, sir. It's a lot of hard work required, and people don't understand this. So people make this big mistake. They think it's easy money, but actually it is not. It's a lot of hard work that is required to be done. and to understand this thing if you're doing it on your own. So the simplest thing is that if you want to really invest money wisely, is that firstly do a little bit of study about it. Don't run behind tips which are available on various platforms, some Telegram channels or some WhatsApp groups. They give you tip every day to day that this is how you should make money. And in the lure of making big money faster, they are actually putting money on something which they are not even sure where they are investing. So, as I said, we are very disciplined people. We understand we have got our gray matters in place. So, if we really want to invest and put the hard earned money which we have earned over the last 20, 30 years, it's best that we do a little bit of studying about it. Not much, just little bit. Just understand what's a large cap, what's a mid cap, what's a small cap, what's the risk involved in it, where we should you put the money and all that. Read about if you're going into mutual fund, which is the best way I feel. Somebody who doesn't know anything, just go to mutual fund, read about the fund, read about the history of the fund. It's all there on the Google or on the MFI platform. You know that this fund has made 12 to 13% aggregate over last 20 years. Easy. I mean, you just put the money there, but it's a well thought out money that you're investing rather than running behind that. This is the biggest mistake people do. And they say 12, 13% is nothing. I want to grow 20%, 25%. No doubt there are industries that are available in the market which have given returns of 2 times, 3 times, maybe 4 times in 1 year. But those are far and few in between, and those are probably lucky industries or sunrise industries which came up and they performed in this particular year. But people don't know how much these industries have struggled in the past. So if you are invested 10 years back, it's now that they have flourished. So people getting into such kind of industries, yes, there are cases, but those are not the regular cases. So people run behind such kind of fast growing money, and there is nothing like shortcut. There's no shortcut to success. If you want to succeed long term, you got to work hard, you got to apply your mind, you got to be disciplined, and then only invest your hard earned money. And then I will say you can never fail in this industry. In India, at least for the next 10 to 20 years, you can never fail. It's a very good growing industry. And in between, there are some path corrections required. Yes, sometimes some industry may have a hurdle as they are growing, the industry as such, or maybe certain policies of the government in the national interest that they have taken may come in the way of certain industry, or certain external factors where other industries are wanting to go, the tariffs and all that come into place, or some anti-dumping, what we have heard about people, or import-export duties, which actually affect the margin of profit of our company. These are the kind of things that happen in between. I call them speed barriers. So one should be cautious about it. And at some point in time, if the speed barrier is such that you need to take a different turn, please do it. That's the kind of assimilation that one should have to be able to negotiate. And if one cannot do all this on his own, it's best that you go to a mutual fund advisor. You go to an investment advisor, tell him that I've got this much of money, kindly invest wisely. It is his job to do that for you. Like we go to a doctor when we fall ill. If you want to invest your good money, go to an investment advisor. There are n number of investment advisors available in the market today. Go to the renowned ones, give your money, they will invest for you. They will give you a certain percentage of dividends, which you should feel happy about. So there is no end to greed. So we should actually put it at rest, invest wisely, and grow at a good pace. That's what I feel. And this is the mistake one should definitely avoid, sir. Sir.
I think that will be very helpful to many people. After your experience, you're sharing that. So the other thing which comes up is normally as a veteran or anybody at any stage, the two types of requirements that they have. One is a short-term sort of a requirement where you need money after some time. And then there's something which you can maybe put aside for a longer period of time, let's say 4, 5 years, 6 years. And you don't mind it being there. So can you talk about a little bit about how you approach short-term, long-term investment?
Perfect. So I think that's a question which I've been asked any number of times, that now we have retired, how much life we have left, how much of happiness life we have left. So we would like to enjoy our own money. Very rightly put across. So whatever we have invested all this while in our service, majority of it, as you rightly brought out in the beginning when we were discussing, that it goes into meeting our liabilities or our engagements, that is marrying off your children, or maybe buying a house, or maybe you want to change a new car at the time of retirement so that you are comfortable. So majority of the chunk, those people who want to use the money which you have got in lump sum into that. So majority of that goes. But I feel the wise people would have already done that before. They would have had a house, they would have had a car, maybe the marriage of the children. They would have, if somebody would have done this kind of investment 10 years back, he would have made those as targets and he would have achieved it by the time he retires. So he has a good corpus of whatever amount he gets, a CR plus, available to him to enjoy his life. But let's say we are able to save half of what we get. I mean, that's the start point, which I have seen people generally about 50 to 60 to maybe 70 lakhs goes away, and they are left with about 30 to 40 to 50 lakhs in hand, depending on how much, what's it called, what do they say, how much money you have taken at the time of retirement. I'm forgetting that real words. How much you have, what's it called?
Accommodation, I think.
Commutation. Sorry, sir. Yeah, commutation. How much commutation you have taken? So now that you have this money available, sir, I think in a 3-year cycle, I have divided my investment in 3-year cycle. So a 3-year cycle growing at a 26% of rate of interest makes your investment double in 3 years. So that's why I put it into a 3-year cycle. But doing a 26% is very, very difficult. So there another cycle is 15% cycle, CAGR of 15%. That doubles your money in 5 years. So now for your immediate goals, like you want to go on a holiday, like I have also gone out, and you need some kind of a corpus. So from the money that you got, you take out that money and keep it with you in simple FD. Don't touch that money because that's your requirement for next 2-3 years. But you like to go on a holiday, sometime abroad, sometime in India, sometime with friends here and there. So you need that kind of money. Maybe you would like to upgrade your house, you want to buy some good TV or something of your choice which you have not done. So that will incur some kind of expenditure, maybe 10 lakhs, 20 lakhs, depending on your style. So I tell people, first be happy, take that money out, because if you can't be happy now also after serving for such a long time, when can you be? So might as well enjoy that for the next 3, 4, 5 years. And for that, if you're looking into investment to give you return back, no, that's not what going to happen in that short time, because there is no short-term investment which will give you that kind of return that you will start enjoying this. That means you will be able to develop a corpus of 10, 20 lakhs. So just keep about 20 lakh aside for yourself, maybe some emergency money also, what you feel. And the balance of the money, then you start investing with a perspective of either 3 years or 5 years. Now, when I say 5 years, I said go to mutual fund. There are a big amount of mutual funds, if you see, which will give you anything XIRR between 12 to 20% today. In a growing market, even the mutual funds are giving a return of 15% plus. And there are not one, there are many in the basket. So you choose that mutual fund of 15% and let it be there. In 2 years, in 5 years, it will double. So if you have put another 10 to 15 lakhs into that, 5 years, it will become 30 lakhs. It will beat the inflation by half. Simple, very simple, and no worries at all. And the balance of this 10, 20 lakhs that you have, if you have the gumption to go into it, go for the equity market directly if you want to do it. And if you can't do that into equity market, then in the mutual fund, go for a little high risk mutual funds which are dabbling into equity, which will give you slightly more returns. And there is something called as a systematic investment plan. You also have a systematic withdrawal plan. So after 3 years time, you start into a SWP from this 20 lakh package, which you have put directly into equity. So when you start getting some withdrawal money from that, it will meet up your other expenses. That's the most simplistic way I can make a kind of a journey for a person. And if he just follows this, I think it's good enough. In any case, your commutation is going to come back to you after 15 years. In any case, the DA is going to double in, say, 10 years' time. So when you have the first 5 years package met and you start your systematic withdrawal coming to you after 5 years or 3 to 5 years, then it takes care of the next 5 years. And after 10 years, your DA is going to double. And your requirements at this age is only going to go down after 10 years. And then in 15 years, your commutation is going to come back to you. So there's a regular flow of income coming back if you have made this cycle correctly, sir. So your initial years, 3 years from your corpus that you got, subsequently from the SWP, and next from the mutual fund, and next the DA and the commutation are going to take care. As this is purely for the people who retired from the defense forces, because we have a regular source of pension and income. But the same thing has to be done by somebody who's like our children, then my advice is totally different, because they have to build this corpus. We'll talk about it separately, sir. How the youngsters build it. So for them, there is a different game plan altogether. And actually, they are in the better position than what we were. And they are in a happier situation as of now. What I tell my children, just do this and forget about everything. Focus on your profession. You don't have to worry about your retirement. So that we can take as a separate subject. But for the army also retired, a lot of senior officers, when I did one of my podcasts, they did talk to me, ki, sir, please tell me, how do we manage our finances? So this is my simple answer to them. And then they can fine tune this with specifics of their requirement. I think they have a roadmap available. So.
Thank you very much, SQ. It's been an absolute pleasure listening to you, and I think a lot of very, very important and very interesting information which you have shared. And viewers, with that, we come to an end for this particular interaction. The link to Maj Gen SQ Ahmed's LinkedIn profile is there in the show notes below. You are welcome to get in touch with him on any matter which you feel or want to carry further with him. And we thank you for tuning in for this particular episode of In Conversation. I was in conversation with Maj Gen SQ Ahmed, and I look forward to bringing more such episodes with more such very interesting and very important personalities and personas to you. Thank you for listening once again. Jai Hind.